Kia ora and welcome to this video on creating a financial statement straight from a trial balance. This video here is going to encompass two things. We've got a missing figure because we're not doing the income statement, and I'm just going to go over the main issues that we had around this question, okay? First thing, as we've done in multiple of the other videos, what we're just going to go through is just item identify, okay? So what are each of these? Okay, so on this left-hand side, you've got cash. That is going to be a current asset, okay? We know accounts receivable is a current asset, okay? The only one that may confuse you here is this this inventory. And inventory is going to be a cost of goods sold, okay? Remember, if this is in the trial balance, it is typically going to be opening inventory, okay? Equipment is a non-current asset. Okay, non-current asset. Our accounts payable, current liability. Bank overdraft, current liability. Capital will be owner's equity. Okay, then sales revenue. These ones are chucked in here just to kind of confuse you here. That is an income. That is an expense. 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 And drawings down the bottom is going to be owner's equity again. A lot of you in this question, one of the common mistakes was we completely forgot about this little line down here that says our closing inventory. Our closing inventory is 22,500. That is also going to be a current asset, okay? What I would do is when doing these questions is make sure we definitely are writing closing inventory as a current asset. As we forget about it, we forget to put it in, okay? Then, so we've got this nice template here all set up, ready to go for you. The one thing that quite a lot of you forgot to do was give us a title. Remember, whenever you do a statement of any point in accounting, we do need a title, okay? This is just to understand where we are, what date we're at, and who is it for. So, statement of financial position, that's the statement that we are going to be working on. It is for Adam's Athletic Store. And it's as at the 30th of September, 2024. Okay, so again, that title there, that gives you a mark straight away. Even if you do the whole statement wrong, you've just gained a mark. Okay, so really important we get that in. Up the top, we're going to start off with our non-current assets. Okay. Remember, sometimes we've asked you to do PPE for this, but this time we haven't, okay? So it's just non-current assets, okay? And our first non-current asset, as you can see over here, and the only one for today is equipment. So what we're going to do is write equipment. And what we can do, because it is the only one here, we can put this straight into column 3, sorry. And that's going to be 40,000 there, okay? Then that's all our things. So what we can do, I'm going to leave a line just to keep it neat, but you don't need to. We're going to look at current assets. Okay, so our current assets for today, okay, they are cash. I'm a bit of a perfectionist, so I'm actually going to go in alphabetical order. We're going to do accounts receivable first. Accounts receivable, and that comes to 15,000. Okay. Then we can do cash, which is going to be 35,000. Okay. Then don't forget this one down here. We need to chuck in now, so that is going to be closing inventory. Okay, which is 22,500. Okay, and then we can total that up. We're going to leave it in column 2 though, because I'm going to show you a quick hack, which that is 50, so that should be 72,500. Okay, so that's where we're at the moment. Nice and neat. Then we're going to minus off our less current liabilities. Okay, and there's 2 of them. So that makes it nice and easy for us. Okay, again, if you can, try do it in alphabetical order because then it's way easier to mark for you. But it's also just nicer in terms of aesthetics. So we're going to start with accounts payable, which is going to be 14,500, and I'm just going to put that in column 1 for now. Okay, and bank overdraft. Remember, bank overdraft is the opposite of normal bank. Okay, so it is a current liability, not a non-current, because that was another common mistake we had on this task. Okay, so that's going to come to a total of 34,500. So we can minus that off at 34,500. Okay, that's going to be our total liabilities. There's nothing else here. Then I'm going to rule a line. And I'm going to call this something that we probably haven't looked at too often here. This is going to be our working capital. Okay, the reason why we do this is because when we go higher up in accounting, working capital is a good thing to know for us. Okay, so that will come to 72,500 minus our 34,500 equals 38,000. Okay? Then, just to tie this off really nice and neatly, what we're going to do is go like this. Rule a line there. Okay? And our total is going to be 78,000, which is going to be our net assets because we do not have any non-current liabilities. Okay, so what we can actually do there is not only keep that there, but we can double underline that because that is going to be our final figure. Okay, so this next bit may be slightly new to some people. It's a missing figure statement. Okay, so what's really nice is we have owner's equity. Okay, owner's equity is ruled in there. What we're going to do is now use opening capital. Okay, opening capital is given to us over here in our nice wee document here. It is here, so that's going to be 60,000. What do we normally do? We normally add profit. Add our net profit. But this is a figure we do not know currently. There's two ways we can do that. The way I'm going to do it here is a missing figure way. The other way you can do it is do a full income statement in the space provided over here. I'm not going to do that because if we've done this first part right, we don't need to do that. If you've got time in the exam, highly recommend using that as a fail-safe, okay? So what we do know is we normally add profit. That normally gives us a figure. Then we less our drawings. Okay, which we know from over here is $1,000. Okay, so 1,000. Then we can underline that, and we're going to chuck our total closing inventory. Okay, closing capital. What most of us forgot while we were doing this this question was that net assets has to equal closing capital, and that's why it's a balance sheet. Okay, so a balance sheet, this must equal 78,000. Okay, there's no doubt about it ever that must equal 78,000 if you've got your assets correct. Okay, so we can double underline that. Therefore, right, we can work backwards to work out what our two missing figures are. So 78,000, we're going to do the opposite of what we would normally do. Instead of lessing drawings, we're going to add drawings. So 78,000 plus the 1,000 is going to equal 79,000. Okay, and just like algebra, like we've been probably doing in maths at the moment, what is the missing figure there? 60,000. Okay, we're going to take away 79,000 from, we're going to use the 79,000, we're going to take away the 60,000, and our missing figure must be 19,000. Okay, and that is the complete answer for this question. The other way you can do it, as I say, you can use the full income statement method and do a full income statement method, and you'll figure out once you've done that, using the correct figures, that you'll still get the profit of 19,000. Okay, that ends today's video on missing figures. Please If you have any questions or queries, please drop them into the comments and we can get back to you. But that is how you use a missing figure balance sheet.